With Jonathan Barratt. He's the Managing Director of Commodity Broking Services in Sydney. Jonathan, good of you to join us. What's your view as to what comes out of this meeting?
Rishaad, it's going to be, I think it's going to be quite an interesting meeting, but I already think that we're not going to see any change. I know we're seeing a lot of talk that people sort of suggesting that they've got to increase production, but I feel that while the price of crude is stable, within that 105-95 range, there is no need to increase production. So if anything, I'm of that camp to suggest there'll be no change, but perhaps a slight change in rhetoric.
Yeah, I mean, what would that materially do, though, any change of the wording of the final communique?
Well, I guess it sort of once again sort of puts their position in play as to how they see themselves, obviously, as the major supplier of crude. And I think that to me is important. They've always mentioned in a lot of the communiques that if the price of oil gets too high or if it gets too low, obviously if it's low we'll reduce, if it's high we're going to increase. But to me that's important, particularly when you've got these scenarios around the world, a slowing US economy and inflationary problems in the Asian countries, India and Asia. So when you put it all together, the rhetoric to me should support the action, and the action to me is just a state of play, because we can't see sort of oil up through that 110, because that's a no-go zone, and I think most people prefer it back to the lower end. But if it's at the lower end, well, that's probably inflationary for some of those other growth nations. So the rhetoric to remain, I think, the same, but I think they might just tweak it a little bit to show that they'll be more active.
Well, you know, a lot of people have said that Saudi Arabia can increase its production, of course, to meet up for any shortfall out of Libya. But that's not the case, is it really, given the quality of the oil they produce, too? Well, I think it's, yes, you're right. The quality of oil they do produce, they can certainly put it up. But I think let's also focus on what's happening in Libya. You know, when we're looking at the amount of good supply that potentially can come back on the market. Now, remember when we said that Saudi are out there and they're saying they're quite happy to increase production. And I think that's important to note, because we can always use that as a reserve. But if we take Libya out of the equation and we take Colonel Gaddafi out, then all of a sudden you've got a change where you've got that potential for 1.4 million barrels to come back on. So of the right crude, which is easily refined. So I think there's more of an incentive there to solve the Libyan situation, get that crude oil back on. That'll placate those people that want an increase, and hopefully we'll see crude oil prices just to the lower end of the range, if not stable. What about compliance here? I mean, with prices at around $100 a barrel, there's got to be a big incentive to cheat here, Jonathan. Yeah.
I think that's always there. That's what OPEC's I think all about, in terms of trying to, you know, sort of the members sort of just working outside the square a little bit. I think that's once again it's the rhetoric that we're looking at. That'll always happen whether oil's at 110 or oil's at 120 or if it's at 95 or 85. That ability for them to sell oil a little bit below their quotas has always been there, because there are different requirements for each particular member. So always hard to police, but it's certainly there, and I think if anything, when you look at it, it has to be determined on where the price of the oil is and what the member actually feels about it.
Now, you predicted an average of $100 a barrel for WTI through the course of this year, but you're also saying now, if we go below 95, hold on to your hats. Yeah, look, what we're looking at is obviously a change of play. You know, when we hear Bernanke last night talking about, you know, the sluggish nature of the economy, we can see all the numbers. We can see what they're doing. We're not seeing that growth. So the demand's certainly not there. And then when you look at India and China, they're trying to slow down. We've seen another set of demand. Granted, we had some infantry draws last night, but that's one number, I guess, in a whole series of numbers. But I feel that if the market sees it through 95, then I can see it going lower. It's a technical point as well, and I think it's a point of inflection where the market will reassess their views on oil for the foreseeable future. And if the US can't get their consumption moving, then I think we'll once again have a supply issue, which we're already seeing in the US, and if that continues, then obviously demand is not as what we've predicted at the beginning of the year, and therefore prices can actually go lower. Jonathan, thanks so much for joining us. Jonathan Barratt, for joining us from Sydney. He works at Commodity Broking Services.